Thanks for joining me, Tom. Obviously, we've known each other now for quite a few years.
Yes.
But for those who don't know you, can you just give us a little bit of an overview?
An overview
of yourself. I know it's a difficult one.
It's a little embarrassing to give an overview of yourself, but I'm a Pisces. I'm like a old school Chicago entrepreneur. We started a couple of financial tech companies, and we're pretty excited about all this stuff we're building. I guess nothing more.
Yeah, you've been earning quite a few things.
So
you became an investor in Zero Hash and then a customer with tastytrade.
Sure.
How did you get interested in crypto, and frankly, why are you still excited about this space?
I got interested in crypto probably for the same reason that, at first I thought, I wasn't really sure what it was. Mm-hmm. I think I've told you my original crypto story. Tony and I, we bought a bunch of Bitcoin, and we thought it was kind of fun. It was a little bit of a joke,
Yeah.
Paid about between $200 and $400 a coin, and then we lost our password. And we never thought about it again. And we were like, do we have a bunch of coins? And we basically paid this kid to hack into our old computer that we hadn't used for like 5 years. Because when it got to about 5,000 or 7,000, we paid some kid to hack our computer so we'd get our password back because we couldn't remember it. And we sold our Bitcoin out. And all of a sudden now we're like, okay, well, this is a little bit cooler than most of our other bad investments. Yeah. So at that point, digital assets and Bitcoin became interesting. I also did the first interview ever with the founder of Ethereum, Vitalik Buterin. And so, when he was in his mom's basement and ETH was trading at about 25 cents coin, and there's this 17-year-old kid in his mom's basement on headphones, and I was doing the interview with him on Tasty, and I was thinking to myself, who would ever buy this? Now I look back and I'm like, what were they thinking?
Yeah,
So
fascinating story. I think that, obviously it's kind of roles reversed. I've been on your show a few times to talk about crypto, and what I always love is, you can see the comments in the side, and then you get the emails afterwards that you forward on to me.
Yeah.
I mean, obviously education is a big part of, I think, of the Tasty brand. And you interact with a lot of customers. You do. I think
it's more content marketing for us. We call it edutainment.
Yeah.
But the reality is, it's really content marketing. Mm-hmm. Everything we do is marketing.
Yep.
But the thing with marketing is, know-how is a very powerful marketing tool. Mm-hmm. People don't want bullshit; they want know-how.
Yep.
And so, we market with a really challenging know-how, and it works.
Yeah. You were just in Texas, and you interact with so many people. I mean, all of the I don't know what you call them. What do you call the Tasty customers? I know you have a.
It's like a cult.
Yeah, exactly. Yeah. And I've seen it firsthand. I mean, but people tell you what they think, and I mean, in terms of the conversations specifically about crypto, what's the pulse right now when people talk to you about crypto? And obviously they can trade right now on the tastytrade platform crypto. What are they saying?
Well, it's so funny because we have such a wide range. We have people that have purchased their first crypto ever through Tasty, and we have other people that I got an email on Saturday afternoon from the lead developer at Cardano, and he goes, Tom, I've been a Tasty trader for a couple of years, and I just want you to know, love you guys, and love Cardano, and I really hope you can keep it on your platform. Mm-hmm. But he gave me all the reasons, of course. We did a piece today on actually one of our guys that built our crypto wallet. Ryan Grace did a piece today on just expense ratios for all these different blockchains, and it was really fascinating. And just how expensive it is, how much the fees are on ETH and how little the fees are on Cardano. It was just really interesting, and we comparing all the major crypto. It's a learning process for me. It's cool.
Yeah, you go deep, and obviously, part of it is crypto is only a subset of the products that you offer today.
Yeah, I mean, it's less than 1% of our business, but still, it's really cool part. It's a technology piece, right? So it's cool.
Yeah, and obviously, Zero Hash is an infrastructure provider, and we service different brokerage platforms. I mean, for you, obviously, it is a small piece of the business, but I watch your show and you talk about crypto. I mean, why should platforms look at this at crypto? What's it?
Well, there's a couple of reasons. First of all, really good trading platforms, your role is to facilitate opportunity. Like that is your job when you build fintech. You're facilitating opportunity for somebody else. So you can't play the role of God and decide what somebody should. If I think that's an interesting investment, why can't I make it? So that's one reason. Is just because our role is to facilitate opportunity, not to decide what people should trade and what they shouldn't. And the other thing is, that when you look at the volatility of digital assets, and you look at the implied move, and you look at the correlation it has to everything else, which is virtually zero, it really is an asset with asymmetrical upside and zero correlation. So if you put it in the middle of a portfolio, there's a lot of statistical evidence at this point that having 1, 2, 3, or 4% of your portfolio in digital assets is hugely beneficial with virtually zero downside.
Yeah, and you were one of the first brokerage platforms in the United States to offer, and more broadly with Australia. I know that we're speaking to your Australian team in 2 weeks at a conference in Australia.
Good.
So it's been great to kind of see the growth and obviously a lot of change.
There's a few brokerage platforms in America, but a lot of the big ones, they haven't gone there yet. TD, Schwab, E-Trade, Fidelity, they really have.
Fidelity just started to dip its toe. Yeah.
Interactive brokers nibbling. It's not everybody offering a full suite yet, but we're also we're in a very toxic regulatory environment.
Yeah.
So for us, the challenge is, how far do you want to push it for a small piece of your revenue?
Yeah, exactly. And in terms of obviously the partnership that we've had, obviously we've known each other for years, but maybe it'd be good to talk a little bit about why Zero Hash. I mean, obviously Tasty became an investor as part of the deal, and it's been we've learned a lot.
Why did we invest in Zero Hash, or why did we invest in you?
Yeah, I mean, why did you invest in Zero Hash? But also, why did Tasty launch a crypto product with Zero Hash?
Well,
beat the drum a little bit, Tom.
First of all, the whole so we only do strategic investments, right? So there's no way, if you walked into our office and you said, and you presented a really interesting business plan, just because we're not a venture firm, we're not a private equity firm, there's no way we're investing in you unless we look at it as a strategic investment. So when we started talking about Zero Hash, originally the first kind of iteration of Zero Hash wasn't geared towards retail investors.
Yep.
And that was less interesting to me. As soon as you pivoted and there was an opportunity for us to do business, with our customers, all of a sudden it became an attractive investment, because I honestly didn't look at the investment in Zero Hash as a vehicle for building up that much transactional revenue. I looked at the investment as potentially, as an equity play, where you guys doing business with Tasty would potentially, that would help you bring on other customers, because we're kind of the largest boutique firm in America, brokerage firm. So I thought that would help you, and it did.
Yeah, for sure.
So that we looked at that as, hey, we win two ways. First of all, we get a great facilitator for our business, because again, we just route orders, right? We're a front end. We just route orders. We don't. We don't make markets or anything like that.
Yeah.
So you handle all that. And the second part to it was, we liked the investment as long as we can use the product.
Yeah. And then on that point of kind of the macro, obviously you talk to different people. I mean, obviously there's different market makers are coming into the space, and different kind of businesses, people dipping their toes. I mean, how do you see that evolving? I mean, obviously you mentioned the regulatory landscape, but there is still pretty interesting movement, some of which we can't talk about publicly, but to see these firms entering the space, I mean, it has changed a lot. I mean, when we first met, I mean, you did the investment, I came to your house on a Saturday and the deal was done by, Monday, Tuesday, and it probably would have been quicker if it was just us. But, it has changed a lot. The business has changed a lot.
I make a lot of deals where then I go to our board and say, okay, I made a deal. And they're like, what?
Still quick, quick.
Yeah. But, so, yeah, this is a tough regulatory environment, and there's definitely, we don't really know what the landscape's going to look like. I do think that because digital assets are a technology play, and they're starting to be recognized as a pure technology play, that there is going to be, I think the current market making structure is going to change.
Yeah.
And it's going to be a combination of both listed and non-listed, but the non-listed marketplace is going to look more like kind of peer-to-peer liquidity pools. That's what we're envisioning for the future. And I think that a combination, I think it's, it's going to remind me of kind of the FX business, is what I think it's going to come down to. There'll be like a interbank market. There'll be like essentially, or some form of that. There'll there'll be a listed marketplace and there'll be a non-listed marketplace, and I think they'll play nice together. As soon as we have some regulatory fences, I see that's what's going to happen. I think that's what's going to happen.
Yeah, maybe taking us away as a final question away from the markets lens, which is obviously your bread and butter, but you also have some fingers in other pieces, right? I mean, Studio that does some tokenization, also Tasty Crypto, obviously, its own wallet and the value of a non-custodial piece. I mean,
so are you asking me if I'm bullish on Web3?
Yeah.
Are you asking me if I'm bullish on?
Where are you? Where are you bullish?
I'm bullish on anything that. So I'm a believer in different types of fintech and anything that I think is kind of takes us into the next generation of technology, where things get where things get simplified, where essentially. The transparent part, obviously, that's the easiest thing to say, but I really like the simplification of it, and I think that digital assets, just by the design, they're so clean, they're so simple, they're so clean, and I also think that the security side to it is going to play a big role going forward, the blockchain security, and I just don't see, given the size of the marketplace, which I understand has come down a little bit, but given just the sheer size of the asset class, I can't imagine it's going to do anything but explode, in one way or another. But as soon as there's some regulatory clarity, I think it explodes.
Yeah, I think our view is that cryptography is a technology, not an asset class, and it certainly is an asset class in some pieces of it. But the technology and fundamental utility of it is what really I think drives us.
Well, I also think that firms like Zero Hash, like this is the stuff that you're building. It's going to go beyond. It's not going to look anything like it looks today 5 years from now. Mm-hmm. Like the stuff that you're essentially clearing and you're acting as a middle person for, the capability of your technology, 3 to 5 years from now, you have no idea what that's going to include.
Yeah.
It's not going to be what you're doing today.
Yeah. No. I mean, the one certainty in crypto is that everything's uncertain. So.
I remember when you guys first started this after the pivot, and when you think about where you've come in just what has that been, 3 years?
Yeah, 3 years.
3 years. When you think about where you've come in 3 years, technology-wise, it's pretty remarkable. It's crazy.
Yeah, I mean, we've obviously scaled the team a lot. I mean, when you invested, I think we were 15 people.
You were 10.
10, yeah.
Or you were 12, and I was trying to get you down to 10.
Yes.
Less is more. Remember that.
Exactly.
Less is more.
Yeah, and we're now obviously global business with different regulatory footprints now in Australia that we mentioned, New Zealand, the UK, EU, Brazil. Sure. So a lot of shift over the last 3 years. Obviously, we founded in 2017, but really it was definitely a very straight line, and then a little bit more of an uptick then.
By the way, that's pretty normal.
Yeah.
But now you're facing kind of now you're facing one of the biggest challenges ever, bigger challenge than normal business.
Yeah.
There's two ways you can look at this. On the one side, a lot of your competition is gone or damaged, and they can't recover. Mm-hmm. And the other side of it is, hopefully the regulators at some point draw the line.
Yep. No. Well, thank you, Tom. Really appreciate the time.
Love it. Thank you.